Good day, fellow investors. Final video of the Sven Carlin summer investing saga. Yes, my portfolios have been down, not the first time in the last 5 years. Let's discuss that and how investing accepts volatility. So Matt here wrote how since he joined my platform, his portfolio is down 37% and how that's the biggest mistake he ever made and how he will go back to ETFs. Okay, that's a normal thing to do. However, he just likely bought at the peak and sold at the bottom. And that's unfortunately how it often happens with investments. I hope the same doesn't happen with him with ETFs, but that's his right. Let's discuss this. So from my portfolio, 21 November, the portfolio was 215,000. Let's take the lump sum portfolio. August 2022, when I closed that portfolio, was 185,000. Keep in mind, I started this in 2019 with 100K, so it is a positive. The euro lost a lot, so yes, about 37% down. That's totally correct. But we have to discuss now the most important thing, and that is investment and volatility. As investors, we have to accept volatility. That's a given. That's what gives us an advantage over everyone else. And we can also take advantage of that volatility in various forms. So if we accept it, take advantage of it, then we make money, good money over the long term. There will always be up years and there will be down years. I can guarantee you, as I said in the mistakes video, I can guarantee you I will make many more mistakes, and I can guarantee you with my life, we can bet everything on it, there will be also down years. If not, I can make a down year if I'm Druckenmiller, for example. But there will be down, there will be volatility, that's a given. Even Berkshire top tick to bottom tick fell 15%, and that happens every 12 years with Berkshire. So that's a given. Even Berkshire crashes 50%. And if you read my platform, if you join it, on top of it, I have this. Before investing, know this. Stocks will crash 70%, and statistically 7.6 out of 10 stocks will do badly, will underperform the market. So that's investing. If we just look at the market, we have had 49 down, 57 down, 34 down, and now we are what, 20, not even 20 down, but might be 50% down from now in the next 12 months. The key here is to understand the risk and reward of what you are doing. I, of course, understand the frustration. That's normal, but my mistake, I didn't explain the risk and reward well enough. I have to constantly pound on that. And yes, I also did run a very concentrated portfolio. As I said in my Selling Every Stock video, I got entangled with the research platform. So Sven Carlin tends to very concentrated away from diversification, what is proper for 99% of investors. And there I got in an issue, so I separated myself now from the platform. There is the model portfolio that is for those who want to have that stability. There is also some risk, but we'll try to work on that over the next years. And then there is Sven Carlin that can put all his money in one stock. If it goes bad, it goes bad. We rebuild next. And that's something that I had to work on. And that got entangled into the platform. So yes, as Matt, his frustration can be my fault because I was too concentrated for other typical, let's say, investors, especially for ETF investors or something like that. But I'm sorry to hear that, Matt, but what can I say? I've been doing well for the last 20 years and I'll try to do better over the next 20 years. But that is investing and it is what it is. Now the model portfolio has 7 stocks. It is a little bit more diversified, so less volatility than an extremely concentrated portfolio. Plus every business is still doing on that fundamentals 10-15% growing over the long term, so it should do good long term. Now, what's the alternative to that volatility? We have already shown the market. It's really crazy, so it's also volatile. Keep in mind, this is a historical outlier, best bull market ever in history. Forget about this. This is the stock market, and this is what you have to accept if it comes to investing. And then, as Carlin said, investors should expect prices to fluctuate and should not invest in securities if they cannot tolerate some volatility. So that's the main message. But what about the alternatives? ETFs, index funds, more diversification, but still, if we go here, it is still insanely volatile. So if you want to stay safe, short-term treasuries, US, or whatever your time horizon is, of course, you will lose some to inflation, but you will have no volatility, no issues. You can focus on your business, on your job. Investing is not for everybody. Not everybody should be an investor. And of course, nobody likes losing money. From Kahneman, we have learned that being down hurts twice as much as the good feeling of making some money. So it's normal to be frustrated. But then investors also expect us, Buffett and Carlin, to be unemotional, which is extremely, extremely hard. And that comes the third part of this video, which is emotions and investing. How to control your emotions when it comes to investing. Our emotions are under the influence of the best bull market in history, 40 years of just the rocket ship up. Few of you have seen actually what a real crash this was not. This was just immediately closed by the Fed. So most of us have only lived in bull markets, and I wonder what will happen when the market really starts crashing, and it will happen again someday, and how will that emotionally impact those that are used to the Fed saving their behinds, etc., etc. That's when real investing comes, businesses, business fundamentals, and that's what I try to do here on YouTube and on my research platform, just educate on the risk and reward. And I know there will be many more down years, many more mistakes. That is a guarantee, and the only other third guarantee is a 28-day money-back guarantee on my research platform. But volatility is part of the strategy that worked, and will most likely continue to work. And actually, from an investing perspective, 37% down, now the portfolios look much, much better than those did 10 months ago. That is investing. So as I said, my model portfolio, I like it now much more than I liked it ever over the last 5 years. And I'll continue to manage it. It will go up and down. You have to understand the risks and reward clearly explained, and then you see how it fits you. I'm sorry for all of those that lost money. There will be many more of you that will lose money when it comes to investing. That's investing, but over the long term, even that investing should do well. As we discussed with my mistakes video, it's a positive sum game over the long term. Smash that like button, and I'll see you in the next video.